Good morning, traders. I'm Dennis Dick.
And I'm Joel L. Connon. Welcome back to Premarket Info.
Joel, you're back from the Upper Peninsula, northern Michigan. How was your trip?
Had a great trip though, but I do have one alarming bit of piece of information. During one of my hikes, I believe it was on Wednesday or Thursday, I saw a bear floating down the river here, and sure enough, I came back and the market was in the tanker. So I've never seen a bear before, so we'll see what kind of signs that has for the
The
market.
physical bear in the market, and obviously this market has been under significant pressure since you've been gone here, Joel. We have obviously been trading down. We had this whole, if you go out a little bit farther on the charts, we had this whole like head and shoulders thing starting to happen before you left there a week ago, and obviously now here we're looking at it, and the market has broke down. That's a little bit too far that chart, but if you zoom in, you can see kind of what I'm talking about, where you had the whole 1680 to 1695 area as a left shoulder, and then you broke out and you got above 1700 for a couple of days there, which was kind of your head, and then you had the right shoulder that all formed. And I'm not a big pattern trader, but it was a fairly obvious one there, and now we've broken down here and not looking pretty for the overall market.
No, and just getting back to the charts over the weekend, identified, Friday's low. We had a week close, settled at 1651 even. Friday's low, 1649 and a quarter. We've dipped under that in the pre-market, have not been able to rally much into the 1650 handle. And so we don't hold the 1649 and a quarter, Dennis. I'm looking for 1641 and a quarter. That's a good 10 handles away from here. That was our low on July 10th.
Gold and silver actually has been holding up quite well, and some of these miners themselves too have actually been outperforming. So the gold's kind of doing what it's supposed to do. When the market goes down, historically speaking, gold goes up. I know in the last 6 months before the last couple of weeks here, it seems like the market goes down, gold goes down as well. So that's a good sign for the gold bugs, because when the market does get nervous, money is supposed to fly into these types of assets, and that has been happening in the last week.
Right. Ran into real problems here at the 1350 level for the last like a couple weeks. Broke under 1300 again, and then with the weak market worries about Big Bad Ben again, we broke above 1350. Really kind of have an eye up on this $1,400 level. We're still a few points away from there. You did have multiple highs in June at 1394.40, 1394.80. Haven't been able to quite get up there yet. Coming back on the downside, 1357 was your low from Friday. As long as we hold that up, I think we're good to go. And then also that 1350 levels from where the breakout originated from.
Let's quickly look at some of these individual gold stocks too, just while we're talking about gold. Bring up Barrick, the biggest one, ABX. It ticked over $20 actually just on Friday there. Closed kind of weak, is up here in the pre-market because gold is trading up here a bit more. But it's been on a basically 7 or 8 day tear here. It was down under $16 just 7 sessions ago. It's now trading over 20. That's an incredible move here for Barrick Gold in a short time.
Right, 20 and a quarter was Friday's high, pulled back to settle near the lower end of its range. But looking at the daily charts, you did get right up to this area in the middle of June, just like
Yep.
when the gold futures got near 1400. A couple highs at 2024 and 2033. You had Friday's high at 20 and a quarter here. So trading below that now in the pre-market, but that'd be a next target for ABX on the upside.
Let's quickly look at crude here this morning too, because crude's had some fun here the last few days. Just bring up a chart that's a little bit closer so we can get a little bit better technicals on it here. It's held up pretty well, considering some of the individual oil stocks, which we'll get to in a second, have actually just been on a terrible run here. The crude itself has actually held up okay.
Right, huge level for our traders to keep an eye on in crude here. First of all, kind of been trading in a 102. We've snuck down the lower 102s last couple, times in August, and then ran up back towards this 108 level, and that's really put the halt on the rally in 2 out of the last 3 trading sessions. And now you're just treading above a double bottom here from Thursday and Friday, 106.46 and 106.40 were your lows from Thursday and Friday. Now you've got down to 106.48 in the pre-market. You've got here a 20-cent bounce. So that's a great level, either a triple bottom or we're going to crank through this 106.40 level and head down perhaps to the mid 105s where you had another double bottom. But traders keep a close eye on that current low in the crude market. If you're trying to pick a bottom here, it's a low risk buy opportunity. And if you're looking to short on weakness, going through that 106.40, you got to be aware of that level.
And you got to be careful with those levels because they are support, but when they are broken, there's usually other traders that are leaning on those levels too, so they can break through quickly. So once they start to get out, you got to be quick. That's the whole key. And looking at ExxonMobil here, the chart, let's go into the Big Ten because, crude's held up. What has happened to ExxonMobil? It is down 18. Get this. 18 out of the last 19 trading sessions. I don't know if I've ever seen that before.
I don't think so.
It's incredible, actually, that it's only down 8 points overall, considering it's been down 18 of 19 sessions. So this is just the momentum market. When it turns quickly. Obviously, we turned about 19 days ago or 19 sessions ago for ExxonMobil, and it has just been straight down ever since.
Yeah, you've also had 7 higher lows, or 7 lower highs, 7 lower lows, and 7 lower close. Yeah, in a row here. And it started to head off a little bit before earnings, and then they did not like the earnings numbers, and that gave it another push here. Now you're trading in the 87s here. 87.48 was a low back in May. 87.29 was a low back in April. So, for this, you just got to wait for at least some kind of double bottom or triple bottom to form here before you start picking a bottom. But it was like the Tuesday streak,
Yeah.
When we had all those up Tuesdays, that's just incredible sell off for here. But if you played it from the short side and just keep moving your stop down here, it looks like 89 is still going to be a key level to break above to get a little bit in the rally mode.
Just looking at that chart just a little bit further, I was just counting while you were talking there. So when you were on the way up there, back at the beginning of July, we had 14 out of 18 sessions that it actually was up. So it's funny how these things can just reverse that quickly. So going into the end of June, beginning of July, up for 14 out of 18 sessions, now down for 18 of 19 sessions. That is definitely the momentum market. And if it's got momentum, it continues to go. And nothing's got more momentum right now than Apple. Apple here, obviously off of the icon tweet from last week, is still continuing to climb. As soon as Icon tweeted that, obviously he had the position in Apple. The stock got 20 points basically off of that, and it hasn't given any of it back. It's now over the $500 hurdle. It's actually up $1 today, despite the S&P futures trading down a couple of points. So Apple's still continuing to show relative strength here. The most hated stock about a month ago is now one of the most loved stocks. That's what Wall Street's all about, finding and identifying it when it's going to become loved.
Well, going back, we talk about gaps being filled in stocks. It took a while in this one, almost 8 months from when the stock gap down in January, down to the 504.77 level. You had a low, and then you had punk earnings, and they trashed it under 400. Well, lo and behold, we come all the way back up to that level. We made a 504.25 high on Wednesday, and also on Friday. We're right in that area. So let's keep an eye on that. 505. If it can get back and hold 505, could have another strong leg up here. Just will note though that Apple did have a real tight range on Friday. So perhaps sellers are starting to it's coming in a little bit here under that 498, 86 level. Friday's low. I tell you, there's nothing for 10 points in this stock. So. Good levels both on the upside and downside in Apple.
I still like it if it takes that 504 quarter there from the high from 3 days ago. I like it though, and I think if it can get above there, I think it could make a run for the 515, 520 area. But we'll have to see. Just speaking of Icon there, obviously he was the one that moved Apple. I just want to go to Chesapeake just quickly here this morning because it was disclosed that Icon has increased his stake in CHK here as well. 25.50 is where it's trading at. It's been as high as 25.75. Closed at $25. So Icon wreaking havoc and helping investors in Apple, and now he's helping investors in Chesapeake as well. He's got to be the most influential guy out there right now, Icon.
Oh, by far. We did get a tick up here, just a straight tick up to 25.75. Not a ton of volume here. It's up only 50 cents. Taking a look at this from a daily perspective here, you are just attempting a breakout here. You had multiple highs at 25.50. Did take that out in the pre-market. Here's another, real thick stock, trades a lot of volume, but I think as long as you hold this 25.50 level, you're good to go to the upside. And then let's just take a look at a weekly. I bet you that's not going to do it. No, the weekly's not too bad here. Going back to the weekly charts, you did have a high here in the 26.
2609 I'm looking at on back on in
Okay.
March. So
Yep.
that's one spot that might come into play here even today if this thing continues to get its upward momentum. But like we said, momentum market here. If this stock starts to break out, I like it a lot better than obviously trying to pick a top here and say is this going to start giving back gains, because it seems like strong stocks get stronger, weak stocks get weaker. Microsoft had an interesting week there when you were gone, Joel. It popped up, it popped down. It's kind of like the yo-yo chart there last week. Got up over $33, quickly gave back all those gains, and then came back down here. So just looking at it just from last week, it was all over the place, really, Microsoft.
Yeah, just got everyone leaning after it, broke out. It was like had the 31.50 to 32 and a quarter trading range forever. It sniffed 33 and then broke above there. And then the next day they come down and they take out the low of the
It's
move.
crazy. Yeah.
Yeah, 31.05. It gets down to 30.84 here. Back up to 31.80. This, remember talking about this stock when it was trading in the lower 26s. Remember that, Dennis, a
Yeah.
long time ago?
Yeah.
And it just kept on flirting with this area.
Yeah.
Well, look how long it took. It traded between 26 and 28 for, I mean, this is a weekly chart. It traded between there for like
Months. Couple. Yeah.
months. Yep, before it finally broke above 28. So perhaps this 31-33 trading range is, going to hold up for a while in the issue, and will determine its next move.
Some of the defensive issues have been under pressure here. Johnson and Johnson has been under pressure with the overall market, obviously, as well. It was an interesting day on Friday, though. If you can get really close, if you can go to just a Friday's chart there, Joel. Right at the end of the day, we had a large buy imbalance was posted there. Obviously, imbalanced traders come out and they try to get in the stock there, thinking that the stock's going to close higher. And then with about 20 seconds to go in the day, it flipped to it. So it was a huge buy imbalance, flipped to a huge sell imbalance, and then all those imbalanced traders that are trying, thinking it's going to close higher were caught, and the stock actually tanked 40 cents there in the last 20, 30 seconds of the day. So it was up at 89.75, closed at 89.37, just boom in one print. So a lot of those guys got caught. It is trading up here a little bit in the pre-market, just ticked up to 89.59 here, but they got bounced around there a little bit. But overall, Johnson & Johnson has been showing some weakness.
Yeah, but I remember when the stock was, making its first ascent through the 90s. We were just, I mean, institutional sellers at every half and even level, 90 and a half, 91, 91 and a half, 92. I mean, they just kept on really unloading the stock in big volumes, kept on marching. Now you hit that 94.42 and we're pulling back. Fridays, we're getting a little bounce off that big sell imbalance. I keep an eye on Friday's low, 89.77. And if you're looking for a resistance point, 89.80 was Friday's high. So not trading too far away from that.
I think they'll line up at that level. If this, for whatever reason, can get a bounce that 89.75, 89.80 level, you have a big psychological 90 level behind it. You have the imbalanced traders that some of them maybe are, frustrated. They're like, I'm not selling it down there when I got caught long. If it gets anywhere up in that 89.75, 80 area, I think you'll find some resistance there from those guys and from the guys that'll lean on the 90.
It's funny because I was playing the 92 and a half weekly puts a week ago before I
Wrong
left,
week.
yeah, I got a little bit of money on them, and then lo and behold, the week that I'm gone here falls $3 into the money. But that's why it's not, even though you have to pay a little more premium in some of these options here to give yourself a little bit more time to work. Sometimes that's the best solution.
General Electric been holding up pretty well, but it has been a steady, just slow steady decline. It seems like it loses like 10, 15 cents a day here for the last month. So overall, I guess it's kind of doing what the market does, but it seems like it's trying to hold up.
Right. I mean, this is I had the good earnings, got the pop off earnings, couple good levels to keep an eye on though in GE. If it gets back up to this 24 and a quarter level, 24 and a quarter, 24.30, that was the highs for basically the last four trading sessions. So if you get a rally up to that, I know we're trading down in the pre-market, but sellers really lining up in the 24 handle. Coming back down below Friday's low, which was 23.86, trading 2 cents off that. Really, the next major support level was the low you had before earnings at July 18th at 23.56.
I want to go to this IBM chart just for a second here because wow, IBM making new 52-week lows here. It's just been weak. It's been weak here for a long time, and it continues to show weakness. It struggled there, got below 190, tried to fight its way above 190 for a few sessions, could not. Now it's starting to break down again, and now we are breaking down to 52-week lows. What's that low you got back in 2000? What are you going back? 2012 to find lows now?
Yeah, actually, when I was doing the numbers on that, I had to go back. You did have some November lows in the mid 184s, 184.78 was your low on November 15th.
So I guess it's not 52
but
low,
yeah, you break below that though, Dennis, and you're looking at some lows from over a year ago down in the 183 handle, 183.30, 183.55 down to 183.03. Were some lows that you had in late July 2012. But this what keeps sticking in my head here is you got the Goldman Sachs downgrade right here when it was trading about 120, 192, 193, and then you had the good earnings and they popped it up over 200. Boy, that didn't last very long.
Didn't last long at all. 2 days it had given it all back, and then it struggled and kind of hung out there for about 7 or 8 trading sessions and then broke down again. Again, the momentum market. You need to identify, obviously, which stocks are in favor and which stocks are out of favor, because those out-of-favor stocks seem to just stay out of favor. It's funny. It just doesn't reverse. Contrarians just are not liking this market at all, but the momentum players are loving it. So I guess you got to wear two hats here, and right now the momentum hats are working. Here's another one, AT&T too, just to show you momentum. When stocks start going down, they continue to go down. And here's AT&T, just continues to show weakness as well. We've been talking about the higher yielding stuff. It's just not in favor right now. Anything that's more of a dividend play, which AT&T is, hasn't been performing well at all. And AT&T actually was breaking down to to a few months low there again on Friday.
Right, pop got under 34, but got a little bit of a pop, closed above 34. You have to go back to the beginning of the year in January. You had a couple lows at 33.75 and 33.82. So that's your next major support levels for T. Coming back on the upside, you had the old Thursday low, Friday high trick within 3 cents of each other. So if you get back up anywhere near 34.35, 34.38, you should be good. Find good resistance. But Dennis, going back to that preferred talk, you pointed the chart out to me of this. I know you don't trade the ETF that much, but look at this preferred stock ETF. I mean, I thought these things aren't supposed to move.
Yeah, they don't typically move. And zoom in a little bit so we can get a little bit better perspective here just from the last basically 2 months here on that PFF, which is one of your just preferred stock ETFs. The preferreds overall have been getting rocked ever since there's been worries that short-term interest rates could start to go to a little bit more tightening bias. Obviously, we'll hear a little bit from the Fed there this week again. The stuff that has a fixed yield, your bonds and everything, but your preferred stocks have quietly, you don't hear them talking about this on CNBC, but the preferred stocks have been absolutely getting murdered here. You've basically been shaved off 10% here on these preferreds, and people are going in these things looking for a 5, 6, 7% yield. So when they lose 10% in a month, or a month or two, obviously that trade is not working. They come to these things for stability, and grandma that's coming to this thing for stability, looking for a 6 or 7% yield killed over the year, just lost 10% in the last month. Now, if you look at that, that's scary. You can't talk about the financial crisis because everything got killed back then. But these things typically, don't move these preferred stocks, and this is your ETF, and it has been getting rocked, and they're out of favor right now. The preferreds are out of favor. There's not a lot of liquidity and stuff like this. In PFF there is, but in the individual issues there isn't. So when an institution comes in to dump stock, some of these individual preferreds fall a buck in a hurry. So, and obviously if you add those up, you get one preferred falling a buck, another preferred falling a buck, the ETF starts to take heat too.
Right. This PFF is trading at just at above the low that it made in May of 2012. So little support in the ETF. We'll see if it can hold to that and muster a little bit of a rally.
Let's go back to the overall market here. We are down again here, just slightly. Fair value is actually down a couple points too. So we're trading down about 3 overall on the S&P futures. Zoom in there. Let's get close and let's really see what's happening. Do you have any levels there that you're looking at that this market might?
For sure.
What do you got
for
us?
Guys. I got this. I'm still focusing on Friday's low here, 1649 and a quarter. We've dipped below it just a little bit in the pre-market, but we're just holding there. When you get these sharp reversals in the S&Ps, when you have a weak close, a lot of times, if it's going to rally, it bangs right out of there, right? On the Sunday 6 o'clock opening. And I was watching a trade last night, and it just struggled to get up to 1655. And now we're back trading under 1650, so we're still an hour away from the open. If we cannot get back over the 1650 level, I see us potentially trading down here to the July 10th low of 1641 and a quarter. And just also, if you're looking for a contrarian sign, I don't know if you took a look at Barron's at all this weekend, but boy, did they have the bearish stuff in there. Time to lighten up. These stocks are,
That makes me more bullish when I start reading stuff.
I know.
But the bear sighting, Joel, that bear sighting when you're up north, that's, a little foreshadowing there. So that's got me scared to pull the trigger and get those bears. That's our show for today, guys. Have a great trading day. Back at you tomorrow.